Does your tax return tell a story? So, our guest today on the Real Life Planning Podcast is Ian Scott, a CPA, and he's got a great perspective on that question. We're going to dive into that today and talk about tax planning for small business owners, in particular, small real estate business owners. And I'm really looking forward to this conversation. Ian and I have done some webinars together, done some coaching and training together, and I think you're going to enjoy it. So, welcome, Ian Scott. Tell us what's important to know about you.
Let me see. I have always enjoyed helping individuals. I started with the big firms. It's always been the fun part, which was always the unreachable part early on, is talking to the individual, even if the individual represented the large company. But just being able over time, realizing that's where my passion was, that's where my heart was, that's where I had to go. That's where I had to be. So I ended up leaving my big corporate job, fancy job, and going into business for myself, eventually going back to the tax firm that I interned with, a small local tax firm. At that time, the owners there were looking to start transitioning out. So it was actually a good time to come in because now I'm gaining equity and becoming a more equity partner when they're ready to really hang it up and take over. So it's just an awesome opportunity to have that relationship early on, plant those seeds, to keep them watered throughout my relationship and my history with the firm. Just a casual conversation turns into something bigger. It was cool. It was cool.
So that is really interesting. Before we even get started on any of this tax stuff, we should probably say what we're talking about today is completely educational.
Yes.
We're not going to give you any tax advice. If you need tax advice to your situation, then you have to talk to a tax advisor directly about it, right? So this is an educational conversation. We hope for it to be thought-provoking and for you to think about some great questions for you to ask your own tax advisor. Ian, if you had to describe what you do for your clients in one word or a short phrase, what would that be?
I would say peace of mind. When you think about small business, a lot of people are transitioning out of being an employee where the taxes are largely being taken care of behind the scenes, out of their control. They're just reporting what's already been taken from their paycheck. But when you become a business owner, a real estate investor, now the onus is on you. So for a lot of people, they jump in feet first and they take off running. And some of them do really well. Most of the time, they may engage their accountant or engage an accountant when everything is said and done, right? They may walk up to me during tax time where I'm doing the work and I'm presenting them a 4, 5, 6-figure tax bill. So it's really when that shock and awe, that's when they realize what they're really involved in. My aim, or why I like to engage with individuals early on, is to help them to avoid that. I think the relationship with the tax professional and the small business owner, it is just at the end of the year for most people.
We want to change that, right? We want
to
be talking
that.
to you all year long.
Yes, It should be an all year thing, just like you have your doctor, your lawyer, any professional that you're working with. It should be at least a quarterly thing where you're checking in. It doesn't have to be an expensive endeavor. It doesn't have to be a time-consuming endeavor. But if we're able to talk and you're able to let me know what's on your mind, what does the immediate future look like, what does long-term look like, we can talk how that impacts your tax bill, your tax return, before it gets to a point where you're locked in and you have to suffer the consequences. If we talk about early enough, there may be things that you can do about it, that you can change, that you can alter to have a better outcome, or at least prepare for, that eventual outcome.
Thinking in particular about the kinds of folks that both you and I work with, like the small business owner who has maybe a small store and a couple employees, that sort of thing. And also the real estate business owner that just is generating income in an LLC from rental properties, right? What are some of the things that both of those folks should be thinking about throughout the year, questions that they want to discuss with their CPA, and then anything that's particular to each type of client?
Small business with employees, just making sure that you have some type of good record keeping. You're dealing with so much that it's impossible for you to understand every single transaction that happens every single day, right? If you have good record keeping, it eliminates the need to have to hold on to all of those things in your memory. You can review the reports, anything that kind of falls out, any big items, unusual items that falls out, it's memorialized and you can go back and refer to it, which necessitates the need to talk, especially if you have employees. A monthly basis is even better, just to talk about, again, any changes, and it's fresh on the mind. If it's something that's going to be a recurring thing, it's something, again, we can get in front of. Quarterly with the taxes. One of the principles of taxes is all income earned is taxable. So just putting something to the side, making sure that you're paying your quarterly taxes if you have to.
But a lot of people don't know that when they first get started. They might have, maybe they lost a job or they got laid off or something, and they decide, oh, I'm going to start doing some consulting, and they have no idea. I know when I did my first self-employed gig, like I didn't know how much money to put aside for taxes, or that I was paying both sides of FICA. I mean, I was very surprised with that first tax bill that I got in my mid-30s.
Yes.
Yeah.
And that's the thing, when you don't realize, when you look at your W-2, there's boxes, you see that there is money taken out, right? When you are the employer, you're responsible for making sure that money is pulled out and paid to the government. If you are self-employed, it's all on you. In a sense, look at self-employment as you're creating a job.
You're the employer and the employee.
You're the employer and the employee. Having that in mind, you want to make sure you plan ahead, again, before all of that hits you at the end of the year. For a real estate owner, real estate is considered an investment for the most part, depending on the number of hours that you're putting into the practice. Either you're considered a real estate professional or you're just an investor. Right. So, and that's a formula. There's guidelines,
really strict guidelines. Yeah.
Really strict guidelines. But of course, being a real estate investor, professional real estate investor, gives you more tax benefits. Like you said, there's strict guidelines. Depending on where you fall within that realm will determine what your tax bill looks like. Is it something where you're an investor? An investor for tax purposes is passive, which means the income is taxed as if it's like a dividend or stock, there's income, things like that. If you're an investor, it's active. This is more like, again, your job.
Right, Schedule C income.
Right?
Yeah.
Depending on how you are operating determines the taxability.
Can I jump in on here a second and say that I often see people who've made mistakes with this. Maybe they're DIYing their own taxes, like in TurboTax or something like that. And not that if you have a simple situation, that may be a perfectly reasonable way to do it if you're mathy, but that is definitely not something you want to DIY. If you're deciding whether you're a real estate professional or not, you should be discussing this with a tax advisor, in my opinion.
Yeah, TurboTax, if they click that box, they should just stop it. They should stop the procedure of the tax return and just say, see a tax professional. If someone finally comes to look for a professional like me, and I look at the tax returns they've done and some of the things they've written off and proceeded to do, there's some egregious errors. If the IRS, if you're selected for auditing, it can be a random thing, but if they just happen to look at your return manually, they could see some potentially large errors that could come back to haunt you, especially if you've been doing it year over year with no seeming consequence. So it is a very dangerous thing to play with. The information's out there, and a lot of that information is accurate, but the application of it and the
more nuanced. Yeah.
Yes, that's not DIY. That's not DIY.
We were doing a webinar the other day with our friend and colleague, Veronica Woods. We were talking about how to build a team of professionals around you, and having tax planning and tax advice is an important part of that team, whatever kind of business you have. How should somebody look for a tax advisor? Like, how do you find somebody that's going to be a good fit for your situation?
Just like with any relationship, you pick someone who fits your needs, makes you feel comfortable, makes you feel heard. Especially with a business, you want someone who matches your needs or even pushes you in a sense. If taxes you're not comfortable with it, you want someone who's going to help you stay ahead of it, push you to get you to the results that you want. That may take cycling through a few. And if you get in early, you can get a feel for what you're going to expect. You're going to try, you're going to meet people, you're going to interview them. You may give them a little piece of work. You just want to try it until you find someone that really fits your needs. There's a lot of CAs. We all do different things. Some are very much into the bookkeeping space and may do taxes on the side. Some people are big into the tax piece and may do bookkeeping on the side. Some do only one and not the other. Really to understand what your needs are going to be and find the individual that fits that piece, because there's a wide array of tax services out there.
Yes, that's right. And especially in this broad definition of the small business space, which can include people that have real estate businesses, rental property businesses, for example, the difference between somebody, for example, who, like my grandfather, owned a gas station, right, where he fixed cars, he would have had particular things that he should be keeping track of, cost of goods sold, and certain ways that he needs to do things is very different, for example, than from somebody who's a professional financial planner, right? Having somebody that knows a little bit about your space can be helpful.
I had a client referral call 2 days ago And the guy works in the NASA space area. That's what he's
Cool.
producing. So I'm
Yeah.
like, okay, let me give you a call on somebody who can help you, because
Yeah.
that's definitely not my space. Having someone who knows
Yeah.
their niche, right? Better niche someone is, the more qualified they'll be able to help you. They just take whatever comes in that may be a flag that's probably not the person for you.
Yeah. I heard a really great quote from Michael Kitt, who's one of the co-founders of my financial planner network, the XY Planning Network. And he said, a niche is a need. I thought that was really cool. So I'm wondering if this is because not everybody may know this, especially if you're an early filer, right? The actual, like the drop dead filing deadline for people that extended was October 15th. So we've just finished this period. As a financial planner, like I've seen, there are some folks who they are ready on February 1st. Their records are great. They've got everything in order. They're ready. They want to file early.
The rare person.
What's that? I'm sorry.
They are the rare person.
They are the rare person. And sometimes you just don't, like, the more assets you have, like you aren't getting all this information that you need from your brokerage firm and from, if you've in syndication event, not getting your K1s till the summer or something like that. So then there are people they're generally ready by the middle of April, right, to file. There are people that extend, and then there are people who wait until the week before October 15th. Sometimes I see that the reason that people are waiting is because they're not keeping good records. So in the real estate investing space, for example, maybe they're just keeping their income and expenses in Excel, or maybe they're just keeping receipts in a shoebox or something like that. What can people do to get on top of that good record keeping so that they're prepared for quarterly or semi-annual tax planning conversations, and they're prepared for tax time with less stress?
The easiest thing to do, you can be a do-it-yourselfer as well as set it and forget it. In a sense, it's a QuickBooks, and then there's a software called Stessa that I know of that does accounting specifically for real estate investors, and then Buildium. So there are 3 wares that you can use that are low cost, in some cases free. Stessa, right now, the clients I'm working with, they don't even pay. You can set it, in a sense, set it and forget it. If you're working with an accountant, can come in and look at it at the end of the month. But you want to try to be very efficient, try to keep everything, all your transactions within like one bank account, one credit card. That way, at the end of the month, you're not pulling from various sources. You're using that one source, and then you're able to kind of put everything together. So what was the question again? I just want to make sure I'm answering that.
Oh, yeah. So how could people be more prepared, right? So that tax time, either quarterly tax time or annual tax time, is a lot less stressful.
Right. So to the extent you have everything organized via one flow of information. One thing you mentioned that I was thinking about was, yes, during the pandemic, so many people began investing in like crypto. They began day trading. Everyone became
I can give you like a huge pile of reports.
You're in partnerships. If you're used to filing early on, you may have to wait. You have to extend your return because until that investment gets their information out, you have to wait, right? Just understanding where your money, where your investments are, where everything is. So that way you don't file, and then you get this big K1 or this big brokerage statement. Now, all of a sudden, you went from getting money back or refund or that small balance or big balance. Communication, really working with your accountant to let them know what you have gotten involved in. I have one client sold a commercial property and just didn't tell me. I just happened to call him. He's like, oh yeah, I sold such and such building. And I'm like, what? That's not something you just wake up and pull the trigger on. This is something that's months of negotiation.
So of course you can't release personal details, but did they do 1031 exchange?
No, they had entered into it and it wasn't going the way that they wanted to, and they just got out of it. So again, and that's something that could have been discussed. What other ways?
That's a good thing to discuss with your tax advisor. Yeah,
just understanding your whole financial situation. Healthcare. You have healthcare on the
exchange. Like,
so many people I know have, because they're self-employed, they may use the marketplace and they don't say anything. Then they may not know, but again, just waiting and being patient and understanding how things work. If you send out a tax return, that comes back, that gets rejected back, that you have marketplace insurance. So it's a lot of things that you have to keep track of. This communication is crucial. But if you can find a system, if you're a record keeper, just taking the time to do it saves you.
Yeah, it really saves you hassle on the back end. And so I see many clients, maybe they didn't get ahead of a transaction, right? So they aren't talking to their tax advisor before they make a decision about something to understand the tax implications of that particular decision. So I'm thinking about a situation where a client had been gifted a property by a parent, right? And then they sold the property and didn't realize that they still had the parent's basis in the property, meaning that their gain was going to be pretty large. And thinking about situations like exercising incentive stock options, right? And not understanding the alternative minimum tax, and that you might have an AMT bill that, or an AMT credit, and you're going to have to pay this tax possibly. So there's just so many things. We are not CPAs. Like, we don't know. As a financial planner, there's obviously a lot of it that I do know what to prompt clients to discuss with their tax advisors. But I think people are busy. They're busy running the business that they're running, right? They're not tax professionals. And knowing that somebody's got your back throughout the year, I think if anybody takes one thing away from that conversation, I would love them to take that. You need a tax advisor to have your back.
You raised a good point with like the incentive stock options, but then with the gig economy and technology, things have become more accessible to a lot more people. Some of these problems, you only think of someone who have a lot of money, but everything, especially within the tax law, is scalable. You can have those same issues, you can have those same benefits. So a lot of times we're just not aware until it's too late. So the need for a good CPA has become very clear. So many people getting into things where they weren't used to before, and the tax law it comes down to them, not above or exempt. Just underlines the need to have someone that you can talk to, or you should talk to, and check in so you know how to handle it. That's a good point.
I've heard you say so many times, how a tax return tells a story. What kind of story do we want it to tell?
Let's just take real estate advisors, right? Real estate investors. There's a lot of benefits, a lot of tax advantages that they have, but it's almost like too much of a good thing. It can hurt you sometimes. When you think of a lot of investors that they may be struggling to go get financing in a tighter market, their tax returns make them look like they're broke.
Their real estate income is sheltered through depreciation expense.
Sometimes people, they either are too aggressive with deductions and write-offs, or in some cases, they're just not reporting their income, which is never an advisable thing.
That's not a good thing.
It's not a good thing. And I think what we saw during the pandemic with the PPP loans, there were so many people who could have qualified had they been honest and upfront on their tax returns, not reporting the income, or just being, again, too aggressive with the write-offs and deductions, where your bottom line is so tiny that you only qualify for so much. So it's a thing of, what do I want to say with my tax return? And a lot of times that comes with thinking a few years into the future. So a real estate investor, if they are starting off and they know that they want to finance, they want to leverage other resources in order to grow their portfolio, they want to look attractive to an investor, right? If you are a real estate professional and all you have is your real estate portfolio and the work you're performing for it, a prospective funder is going to want to look at your tax return. That's going to tell the story of who you are financially. They're going to look at how much money you made, how much money is left over, because what's left over is essentially what you're living off of. And if that looks like you really have no money, you're struggling, but they may not see you as a good candidate.
A good lending risk. Yeah.
You're a risk to them.
Yeah.
So if you know that this is what's going to arise in the next 2 to 3 years, then it's a good time to talk about maybe setting up your expenses. Maybe that's something you defer, right? If you were going to look to invest into something big, that may be a good idea to defer that so that your net income looks good. Always report your income. Always report your income, even if it's something that the IRS will never, ever find. You just want to paint that story. You want to show that. Even if you're looking to buy a house, I tell people if they're a W-2 employee, you want to know what neighborhood you're going to live in, how much you're going to spend, what the requirements are. So talk to a couple of lenders, find out what the requirements are, and see if you meet those requirements. If not, what can you do to meet those requirements? That may even mean, okay, if you have to get like a side gig or something to build your income up, right? If you can show that you're able to make the money, it's not necessarily how you got it. Can you make the money? Do you have the money to be able to sustain yourself? And by having that conversation as early as possible, you can take legal, reasonable measures to fit that. So when they look at your tax return, okay, you're a quality candidate. I want to work with you. So
tell me a little bit about what's next for your business.
As things become easier to access in terms of, you think about the gig economy, you think about do-it-yourself businesses, real estate investing, there's a lot more people just seeing the benefits of it. And there's a lot of real estate popping up, just becoming a more full service firm. Right now I have a retail shop, and there's a lot of people walking in, and it's transactional. It's the end of the year, they get their taxes done. But just looking to work with longer term individuals from the birth of their business to the extent where I can't service them no more because they're too big. They're moving on to a bigger firm. So me be able to give them a firm foundation on taxes and finance to be able to think, grow their business to where they scale up and they're so large that they need to move on because it's out of my realm. That is what I'm looking towards. Someone were to pick up the phone, there's a problem that they have, and they could have a bookkeeper, right? They can have other services, but they just need a second set of eyes to look at something. They need my advice. They want to look at a transaction. They want a review of some sort. So becoming more consultative and that giving people a perspective that, again, that they're going to be able to use and to move forward. That's what the new season looks like for me. Yeah.
Oh, that's exciting.
Yeah.
So what would you say is the best piece of advice you have ever received?
There was a quote that I read. It wasn't something that I received, but it's from Ralph Waldo Emerson. He says, always do what you're afraid to do.
Oh,
right?
that's powerful.
It is. If you're afraid of something, if you feel a sense of fear, you want to examine that and where it's coming from. Sometimes it's warranted, it's to stay away, but sometimes it just might be a challenge for you or a chance for you to grow. So in those instances where you see that may just be something in your head making you afraid, you want to look for ways to be able to work through that because there just may be opportunity or growth on the other side of it. It might be a difficult conversation to have. You're not sure how the person's going to respond to it. But what I found in business, for the most part, most people are reasonable. Most people are okay. They understand it's not the end of the world. There may be like taking a risk, me leaving my corporate job because I wasn't happy, I wasn't satisfied, to jumping into being self-employed was scary, but it was like I was being pulled that way. I was already engaged from the job. I was already not happy. Eventually, I was going to get fired because my whole body, my whole self was not there anymore. So it was scary, but you just learn. And one of the things that I was very, very thankful for was having that tribe, having those resources, building relationships so that once I was on my own, I turned to my tribe and they were offering me resources, offering me things I can do to get me started. So if you feel a sense of fear, you want to make big changes, if you feel a sense of fear, it's worth looking inside and seeing where is this coming from and how can I use this feeling to fuel me onward.
Oh, I think that's a really powerful piece of advice, Ian. I think it's interesting that you felt this pull to be an entrepreneur, to be self-employed, to do your own thing, if you will. And I always think, and I'm curious if you agree with this or not, if it's in your heart or your head, that you already have 60% of what it takes to start and be effective in your own business, right? Because it's not in a lot of people's heads. So the fact that you feel pulled towards it or drawn to it means that you may be meant to give it a try. Now, it might not be the good season in life to give it a try because when you start a business, there's usually a period of time where you're not making that much money. So it has to be right for yourself and your family, obviously. But the fact that it's in your heart means that maybe you're meant to give it a try, even if you're afraid of it.
Yeah. And then you may see this on the planning side, the investing side. A lot of what the path people are on is based off of what they learned as a child, school. But when you look ahead, you think of saving for college. What colleges will look like in the next 10 years is going to be very different than what we experienced as children. The need for college is vastly different because with technology, with the way things have become commoditized, it's just a lot of those positions we went to college for, students, children can learn on their own. So should they invest their money in a 529 in something that's so rigid, or can that money be put somewhere where it's has a multifaceted purpose? If college ends up not being the way, or they get a scholarship or something, that money can be then utilized or repurposed for something else.
I think that's a really interesting conversation. Maybe we could dig into that in a future podcast. My two younger kids, we made lump sum contributions to their 529 plans when they were born. And now, because it's been a beautiful 2 decades in the stock market, right? And we have enough for if they conserve their resources and they don't go to super expensive schools, like they have enough for undergraduate and grad school. But I don't know that 20 years from now, that situation is going to be exactly the same. I'm having this conversation with clients a lot that have younger children about like how much goes in the 529 and then how much is invested elsewhere in more flexible resources. So I think that's a really interesting topic.
Yeah.
Just to finish up here, what are you curious about right now?
This is going almost into the political space, but just looking at the changes with the technology, with people as a whole, it seems like there's this coming together, people of resources where bureaucracy and big business, it seems to be kind of losing power. One of the beautiful things about the gig economy and technology is that one has a chance to amass some of the wealth that these big companies have achieved. So if there's a $1 trillion company or $1 billion company, if everyone can get a small slice of it, that's enough to live off of and sustain yourself. So just seeing how everything develops politically and economically wise, I'm just curious to see that, to stay on top of it. I encourage people to pay attention to those things. Again, not be afraid to take a risk. Start small. It doesn't have to be something where, you leave your job and now you
Right.
have
Could be side hustles.
where, you put some time into and work from. So just keep my eye on, look at what's happening with blockchain technology, with crypto. But what does this all mean? And how does someone like me take advantage of it to be able to achieve their goals? That's where I'm most curious, utilizing what's coming down the pike just to make my life better, to make my clients' lives better.
I'm glad you're curious about that, because I think that makes you the really thoughtful counselor that you are, and a partner with your clients in helping them build and scale their business. So Ian, where can we find you online?
We have a Facebook profile. My profile on Instagram is IT Scott CPA. I'm also on LinkedIn under my name, Ian Scott. And yeah, so those are the places you can find me.
Okay, wonderful. We'll put those in the show notes. And thank you very much for this conversation today. I look forward to continuing it in the future. I always enjoy talking to you. And any words of wisdom for us as we finish up?
Yes, taxes, they don't have to be hard. A few simple principles and thoughts. You can take advantage of what's out there for you. You don't have to run away from them. So just find yourself a good professional that speaks your language, works well with you, and you'll be fine.
Thank you very much, Ian Scott, CPA. And to everybody listening, if you have a topic or a suggested speaker, please email us at podcast@reallifeplanning.com.